Hello everyone, welcome to our webinar. My name is Craig Pritz from JRG Advisors, and today we're going to be exploring the world of insurance, discovering the right coverage for your needs. First, before we get started, a couple real quick housekeeping items. Questions and answers. We do ask that you ask your questions through the question box in the upper right-hand corner. We will be addressing all of those at the end of the presentation. Any specific or detailed questions we may be responding to later if they get too detailed. We will be providing a copy of today's webinar. We'll be providing a copy of the slideshow and all the question and answers as well. So first I want to welcome our valued clients and partners. Thank you so much for joining us today. Today we're going to talk a little bit about different types of insurance. And first thing is, not a sales presentation today. Under no means do we feel that every company should have every insurance under the sun, but more we want to educate you on the different ways there are to protect your business, your employees, the things that matter to you. So we'll go ahead and get started. First thing, really when we talk about insurance, we're just talking about managing a risk or protecting you from a certain loss. Insurance contracts are usually agreements where you provide certain premium and they provide compensation as a result of that loss. So we're going to start today by talking about the different categories of insurance. And really when we talk to a business, the insurances really do break up into a couple areas. There's the business types of insurance, the property, the casualty, the vehicles, the tangible items. There's the employee benefits, the items you want to offer to employees to keep them happy, the medical, dental, vision, life. And then there's some unique insurances, things like key man and buy-sell agreements that help with the business continuity and protecting the business from an exit strategy standpoint. So first we want to start by talking today really about the property and casualty. So you've got a brand new business and you're designing your business, you're getting ready to get started, and the first thing you really need to do is you need to talk about how you're going to protect that business. General liability. General liability can cover your premise, and this is a third-party coverage. It covers the space that you may be renting, or if you own the building, your liability coverage can cover that as well. But then there's also product liability, and this is the coverage for the products that you're creating, distributing. So there's two types here. A lot of times when you go to rent, your landlord is going to want to see some certificate of insurance before they even let you in the door. So a lot of times it starts there. As you get your business going, now you want to talk about and you want to think about business property insurance. And when we talk about business property, this is the tangible and intangible items related to the business. This could cover the personal property, your computers, things like that. This can also include, very important today, your cyber or your electronic data protection. Cyber insurance, very important these days. If you're doing any work on the computers, if you're housing employees, or I'm sorry, if you're housing clients' information in your computers, you could find that the cost of just notifying people of a data breach could exceed the cost of the cyber insurance. So that can be a rider, or that can be separate under your business property insurance coverage. Now you start getting some employees hired, and you've got to start thinking about workers' compensation. When it comes to workers' compensation, workers' comp was really designed to protect the employers from lawsuits resulting in things of basically negligence on their part. But there's two key parts of workers' compensation insurance. The first, probably the one that a lot of people are familiar with, is the employee medical coverage, or the employee portion. And this could be in the form of disability insurance, coverage for medical, or even life insurance if there happens to be a death. But then the second part of this is the employer's liability. And I think this is kind of where one of the key parts in and where workers' comp was grown out of. And this protects the employer from basically negligence arising on their fault. If an employee sustains an injury as a result of their negligence, this is designed to protect them as well. So you've got employees hired, now you've got employees out working, and you may want to consider errors and omission insurance. And really what errors and omission is it's a first-party liability coverage that protects the business for claims made against the company regarding things that the employees are doing. When it comes to errors and omission, This is something that you definitely want to talk to somebody about. The nature of your business, what you're doing, what your potential claims and suits could look like to determine what sort of amount of errors and omission that you may need to protect your business. Now you have employees who are maybe out and about, and they might be using employers' vehicles. So you might want to consider commercial auto insurance. This is a liability policy that is meant to protect the employer's vehicles when the employees are using them for business purposes. So it doesn't protect the employees' personal vehicles, this protects the employer's vehicles. And this can extend all the way out to the employees' use of the vehicles, always on use of the business, but not on their personal. Now you got your business up and running, you have a board or the directors and officers who are directing you. You may want to consider a liability policy that protects your business against action resulting from the directors and officers. And this can be payable in a couple different ways. There's different ways to structure this. This could be set up that it is payable directly to the directors and officers or payable to the business. But at the end of the day, it's meant to protect the business from actions against the directors and officers. And then depending on the nature of your business, you know, we're covering a lot of the high-level insurances today, a lot of the more common insurances, but there's a lot of industry-specific stuff. And depending on what your business entails, there may be other things that you want to talk to your insurance professional about. You know, if you're working with hazardous materials, you may need some additional insurance there. So now you've got your business up and running, you've got the business protected, the vehicles, the next step is the employees. And employee benefits are really important tools today to attract the best employees, but to also retain the best employees. There's no question with all the changes that we've seen in healthcare over the years that this is a very important piece of deciding on jobs for people today. And the first piece of it typically is medical insurance. This is usually the first conversation we have. There's a couple different ways to go about putting together a medical insurance plan today. Most groups are familiar with what we call fully insured plans. These are plans where we work directly with the insurance companies, your Highmark, UPMC, United Healthcare, Health America, Aetna, Cignas, and they assume the risk. They provide a plan, pay a premium. Based on the contract and the design of that plan, they agree to pay out when certain things happen, when the employee uses the insurance. At the end of the day, when it's fully insured, the insurance company is assuming all the risk. And these types of plans, these are available to both groups and individuals. I will preface just briefly that for individuals, the marketplace is currently closed, but plans still can be selected with a qualifying event or a special enrollment period. For groups, though, there's another way to insure your company, and typically we see this for groups of about 10 or more. Today, self-funded and level-funded are a couple similar concepts that are very important things to consider for businesses. At the end of the day, everybody recognizes what's happening with their insurance rates. For the most part, they're going up year after year, and they're going up at a clip that's really greater than businesses are growing. So the answer for a lot of companies is going to be self-funded or level-funded. Self-funded works where the group assumes a certain amount of risk, contracts with a third-party company, a third-party administrator to handle their claims, usually rent their network, process all the paperwork. And then one of the most important parts of a self-funded plan is the stop-loss insurance. And this is really what protects the employer from really going broke if there's a large claim or a bunch of claims. In the self-funded world, when the rates for self-funded for your assumed risk, stop-loss, and your third-party administrator are lower than your fully insured rate, there's no risk. At the end of the day, there's actually the potential for a greater gain as well, as most companies will allow employers to keep some or all of the profits that result if they don't use and exceed the claims that they budgeted for. So self-funded can be a really great way for businesses going forward to provide employee benefits, but do it in a way that's going to help manage their costs. And at the end of the day, we recognize where rates are going. This is something that a lot of groups, or all groups, should be considering depending on size. The prescription coverage. In today's world, we're most familiar with our prescription coverage being a part of our fully insured or self-funded plan. But for some size groups, you could have a separate prescription drug plan. Next, we're going to get into dental insurance. And dental insurance, equally as important as medicals. There's a lot of reports and studies out there that will show that our dental health has a very large correlation to our medical health. So dental insurance is probably equally important as medical. And there's a couple different ways to offer dental insurance. You have indemnity plans. Indemnity plans can work well when you want to use a certain dentist that does not participate with networks. Indemnity plans are where the plan agrees to pay a dentist a percentage of the cost of services based on a schedule. Again, they can work. They don't use typically a pre-negotiated network, so they can work well when you want to use a dentist that is not participating in a network. Some of the more common dental plans today are the participating provider network or participating provider organization network plans, PPO plans we call them. And these plans are where an insurance company contracts with a list of dentists and provides coverage within that list of dentists, but typically also has coverage outside of that network as well. You do receive a higher level of coverage when you're using a dentist within the network, one that they've contracted with. And then dental health maintenance organizations or dental HMO plans are also available. We see these, we tend to see these in more areas, certain areas more than not, just based on networks. A dental HMO works where there's coverage that's provided, but it's provided based on a fee schedule. Typically with a dental HMO, the dentists that are in that network are all sharing in the cost and the cost of services and coverage. So it's a very defined network. It's typically not the largest network, but it is defined to be a certain size network. And again, these are more or less popular in areas based on the networks that are available. Vision insurance. Vision insurance tends to be one of the greater bangs for the buck, so to speak, in that vision insurance is a very affordable insurance, which provides a very good benefit, very strong benefit. Typically, you're going to be provided 100% coverage or a percentage or discount of coverage on vision exams and services. That can include things like your glasses, lenses, frames, contacts in lieu of. But again, vision insurance is a very strong benefit for the cost. And in today's world, vision insurance is now available not only to groups but to individuals also. So now your business is growing. You've got the basic employee benefits package together. You've got some medical, dental, and vision, and now you start thinking you want to expand your benefits. Probably the next thing people tend to look at is life insurance. And first I want to preface this with life insurance can be very exotic, and it can be purchased in a couple different ways, as a group, as an individual. Today, I'm focusing on life insurance more as a group. I'm going to talk about group life insurance. We could do a whole webinar just on the different ways to purchase life insurance and structure those plans. But again, we'll attack this from the group standpoint. Life insurance really basically is a contract where a person agrees to pay a premium, and the insurance company agrees to, typically upon death, pay out a certain amount of money. There's a couple different types of life insurance, and the most common when it comes to groups is term life insurance. Term could be a 10, 20, 30-year term where the life insurance, you pay a premium for that period, and if the person dies within that term, it pays out the set contracted agreed amount. But there's also investment type policies when it comes to life insurance. Things like whole life, variable life, universal life. These life insurance policies have the ability to grow some cash value. Typically, we see employers using more the term life insurance when it comes to group again. But one of the things that can be either included in your life insurance policy or added as a rider is what we call accidental death and dismemberment, AD&D insurance. AD&D is basically just a set amount of insurance that pays out due to either an accidental death in addition to the life insurance, or sometimes it can pay out based on certain accidents as well. And this is above and beyond the life insurance policy, the AD&D. There are some exclusions. There are things like suicide, war, death by illness, and there can be a lot more above and beyond that, but those are some of the most common exclusions when it comes to accidental death and dismemberment. Next we get into disability insurance. There's a lot of different trains of thoughts or philosophies on, do I offer short-term only, long-term, do I offer both? There's a lot of factors that will determine that. Your business, the nature of your business, the employees that you're hiring. Those are things that we definitely can talk about in more detail specific to your industry, but the high-level overview, short-term disability, it essentially is going to provide a disability benefit, which is a percentage of a person's income, typically for a short period of time, and we see those most commonly as 60 or 90 days. So somebody gets injured and they're out for 60 or 90 days, they can collect, typically around 60% of their income for that period while they're off. There's also long-term disability. Long-term disability and short-term can be offered separately or can be offered together, dovetailed together. When they are offered together, you definitely want to make sure that you match up your periods. If you have short-term disability running for 90 days, your long-term disability would then start at 90 days. Long-term disability typically provides out for a longer period of time. That could be anywhere from, say, 2 years to all the way to Social Security normal retirement age. Also provided with the long-term disability provides it on a percentage of income. 60% is kind of common. We'll see some specific plans that will go as high as 66 or 70. But when you're looking as a group, most commonly you'll see it in around that 60% range for the disability. Other types of employee benefits. A lot of different types of savings accounts, or a couple different types of savings accounts that can be offered. The first one I want to talk about is a health savings account, or an HSA. First thing to keep in mind with an HSA, this is only available to groups or individuals who purchase what we call qualified high deductible health plans. These are health plans that meet certain criteria set forth by the IRS. The key benefit with a health savings account, this is an employee-owned account. The employee has the ability to contribute money to their account on a pre-tax basis. Any third party, including an employer, can contribute to the employee's account, not pre-taxed. That money earns interest, it grows, the money rolls over year after year, and the money is there to be used for qualified expenses. The IRS has a very detailed list of things that this health savings account can be used for. The money that's in there can be used for most items covered under your health insurance, a lot of things above and beyond that, like your dental, vision. But I refer you to the IRS's list of approved expenses there. So that's an HSA. But we also have something called a flexible spending account available, or an FSA. We love initials. An FSA is a similar type of spending account. It is available to groups, to the employees of groups, I should say. It allows the employees to put money aside on a pre-tax basis. That money is there for qualified expenses. One of the nice things about an FSA is some of those qualified expenses could be things like dependent care. That could be child care or adult, depending on if it is a dependent adult. That can be transportation coverage. So essentially, if you have employees who use these services, you could allow them to put money aside on a pre-tax basis to contribute towards those services. Now, there are some restrictions for owners that, depending on how the business is established, and there is also a limit on how much money in a flexible spending account is allowed to roll over. Used to be none. Used to be the use it or lose it rule. We did have a change on that, and they do allow a certain amount of money on a flexible spending account to roll over year after year. The key with an FSA, though, is to really think about what your year is going to look like from dependent care, transportation, and medical expenses standpoint, and try to budget that properly so that you don't have to worry about rolling over or losing money. Another great benefit that employers really should consider offering, you can look at any study out there, commercials, but not enough people are putting money aside for their retirement. It's just a sad fact of life today, but this is a great benefit that employers can offer, and there's a lot of different ways to set up things like a 401k plan, a simple retirement plan. But essentially what this is a defined contribution. It's tax-deferred money that may or may not be matched by an employer, that can be set aside for an employee's retirement. There's restrictions on how the employee can use that money. Obviously, that's there for retirement, so any early withdrawal can have some penalties, but this is a great benefit for employers to consider offering, considering that most people in today's world do not have this already established on their own. Now we get into a side of employee benefits that we tend to refer to as voluntary benefits. And what we mean by this is, when it comes to the other employee benefits, there is expected to be some employer contribution with those. But with a voluntary benefit, these are items that can be offered to the employees. The employer becomes the vehicle to offer these, but there's not an employer contribution required. Employers may contribute towards the voluntary. They may contribute on a defined contribution level, letting the employee select from a menu of plans that includes voluntary. But at the end of the day, voluntary does not require an employer contribution. There are sometimes limits on the minimum number of people that you have. You have to have a couple people, a couple policies. But these can be tremendous benefits for an employer to offer. Typically, employers don't know everything about employees, and they don't know all the ins and outs of them. This is a benefit that an employer can offer with no contribution, allowing the employees to select which benefits are right for them. And some of the most common voluntary benefits are things like critical illness. Critical illness pays a lump sum benefit based on a diagnosis of a specific illness, and that can include things like a heart attack, a stroke, blindness, end-stage renal, kidney disease, or failure. These are just some of the things that can be included in a critical illness plan. Sometimes cancer is included in critical illness, and sometimes it stands alone. Cancer, I'll say that I've seen a lot of different studies. I don't know what the exact percentage is, but I know it's a very large number of costs associated with cancer that is not covered by the medical insurance policy. We're talking about travel expenses to get to the best cancer facilities, wigs, things equipment that just isn't covered under your medical policy. A cancer policy can cover. This provides a lump sum benefit when there's a qualifying diagnosis. There's a list of cancers that apply to this. It can be available to family members as well, and it is a tremendous benefit to consider when you recognize the cost associated with cancer. Typically with cancer policies, the cost of the premium covers itself when you use the policy for a preventative visit. A lot of times you get your once-a-year preventative visit, they're going to provide you a benefit back for getting that done. A lot of times that can come close to covering what your premium was for that benefit. So those can be really smart policies to look at. We also have accident policies. Accident policies a little different than a critical illness. This is more for a specific type of accident, and this can range from a concussion to an accidental death. But if you're somebody that's accident prone, this is something to consider. I've seen people who are people that fall a lot, break a finger, get stitches, and these provide a benefit every time those happen. So above and beyond what their medical insurance is. So accident policies can be great. And then the last part of this, we have indemnity or gap insurance. We're seeing a rise in this type of insurance these days, and it's directly correlated to the rise in cost sharing with medical insurance plans. Deductibles have gone up, co-pays have gone up, cost sharing for tests and outpatient procedures, everything's on the rise. More employers are looking towards indemnity insurance, and what this is it basically provides a lump sum benefit for certain types of items listed on your medical insurance, like a hospital confinement, outpatient surgery. It helps offset that high out-of-pocket that's there. So I say to groups out there today, if you're thinking about moving your lower deductible to a higher deductible to save some money, think about offering something like this to help the employees bridge that gap. That can be a great benefit. So now we've got the business, we've got all the employees covered, we've got a very robust benefits package, we're attracting the best people out there, and with that means wondering what happens if something happens to one of those best people. You know, what if the best person leaves, or gosh forbid, what if they die or become disabled? How does that impact the business? So we talk about business continuity planning. This is one of those things that you might not think is as important as the business insurance or the employee benefits, but when it comes up, you find that it really is. So it's one of those things that maybe you don't think about until you need it, but what we're talking about here is different policies. First one, a key person life insurance policy. You know, you get a business that's made up of an investor, somebody who comes to the table with the money, and somebody who comes to the table with the ideas, the concepts, the brains. If something happens to one of those, the other wants to know what's going to happen to the business, how are they protected? You know, a lot of times there are buy-sell arrangements written in the agreements, but there's not the funding mechanism for them. So when we talk about a key person, first we talk about, you know, there's one person at the company that, boy, if something happens to that one person, it's going to really impact the company. Your top sales guy, you know, the top person in the company. You may want to consider a key person life insurance policy on them. The business owns that policy, they pay the premium, but the employee is the one that is the insured. That key person is insured. And then as I was referring earlier, you get a couple key people to come together. A lot of times there is a buy-sell agreement put together, but a lot of times they don't have the funding mechanism for that. And basically what that does is it's an arrangement that if something happens to one of the owners of a business, it provides money to either buy out the family of the other owner or provide that business continuity. You know, at the end of the day, if you have two owners that come together and something happens to one, immediately questions start to arise. Am I now in business with the rest of the family, or does the rest of the family want bought out? Is there money in capital to do that, or does it mean a loan? The truth is, a policy purchased in advance is pennies on the dollar compared to dollars on the dollar when the accident happens. So buy-sell arrangements are something people typically don't think about in advance, but I encourage you to consider those and think about those. And then lastly, you know, we hit this as a kind of a high-level educational, some of the things you should be thinking about to protect your business, different ways to do that. There's a lot of newer forms of insurance out there. There's a lot of different ways to cover a lot of different things, and some of the things you'll start to hear about, pet insurance. You know, we love our pets. We love our pets so much, they're parts of our family. It only makes sense that we should have insurance for them. And the truth is the cost of taking care of them has gone up as well. So pet insurance is on the rise. A lot of ways to purchase pet insurance, group, voluntary ways, individual. But at the end of the day, a lot like medical insurance, it provides coverage, a percentage of veterinary costs based on a predetermined contract premium for things like accidents and injuries. Identity theft protection. Identity theft protection, we know this is on the rise as well. Basically, it's a predetermined reimbursement for victims of identity theft. And this can be a whole variety of costs. It can cover things like restoring their identity to a whole variety of different things. But identity theft is something that, in a technology age that's on the rise, and sometimes partnered with identity theft and sometimes separately, is prepaid legal insurance. Prepaid legal, typically this is a network or access to a network of participating firms, attorneys that will provide a certain level of advice or consultation, and then they will provide maybe discounts above and beyond that. Last thing we want to talk about is how these insurances all work together, and the truth is a lot of times we don't think about it, but they are often tied together. And you know, changes in just one of the silos of insurance may result in changes in the other areas. You know, your business is growing, you're increasing your workspace, you definitely want to increase your business insurance policy, but maybe that growth is due to adding new employees. So now you've got some new employees you got to add on to the medical, dental, vision, life, disability. But did you have to buy new computers for them? Do you want to include that? If something happens to those computers, you want to include that in your policy. Are they going to be using the vehicles? You definitely want to get them on the business insurance policy, the vehicle policy if they're going to be driving. You don't want them out there driving and forgetting to put them on that policy. And one of those people you hired, are they somebody key to the business? You hired them away from your competitor and they're going to make all the difference in the world. But at the same time, you need to know you're protected in case something happens to them. So a lot of times we don't think about how these all interact and work together. That's something that we certainly can help with as we see changes in one, that we can make recommendations for you to think about the others. So we're going to take a second, look and see if we have some questions to address here. So if you have questions, please make sure you type those into the question box in the upper right-hand corner. Please hit send. As we pick up questions as we go along, too, if we pick up questions afterwards, we'll be sure to get those out as part of the presentation. Fantastic. Everybody, thank you so much for joining today. You have a wonderful day.